Welcome. I'm Keith Albritton alongside Justin Lee.
Yeah, I'm excited to be here. It's going to be good.
Kind of get to know us and who we are, how we do business. We're going to talk all things mortgage. We're going to try to cover everything, Justin. So,
Loans for homes.
Loans for homes.
Hey, it's Friday, May the 9th. Hope you guys were able to tune in last week to Mexico, but this week we're back to regular programming. So back to the normal studio, and today we're going to talk about interest rates and how those move with the market and how they affect your payment. So a lot goes into making your rate, however you want to say it, but basically every rate is different. You can't just call your lender or call your banker and say, hey, what's your rate today?
You think, Justin, that rate's important to people?
I think a little bit.
We never hear that conversation, do we?
No, we don't. Nobody ever asks what the rate is. They just want to know they can get a loan, right?
Yeah.
But I mean, a lot goes into it. Your credit score, the type of loan you're doing, the type of dwelling you're buying, where you're buying, how much you're putting down. I mean, there's a lot that goes into that, and we're going to talk about it all today.
Yeah, and that's why, Justin, we can't just answer that question when somebody calls. And I mean, we wish we could. We wish there was one rate every day for everybody, and there's not. And I always say, Justin, that an interest rate is like a thumbprint. Everybody's is different. And as you mentioned, it does, when you call us and you ask us, well, we're going to want to know what your credit score is. We're going to want to know, are you already under contract? Are you buying a primary residence to live in? Are you buying a second home? Is it an investment property? How long do you need to lock a rate in for? Because Justin, rate locks, believe it or not, come in different increments. There are 7-day rate locks, 15, 30, 45, 60, 75, 90, 180. It goes
all the way
on
up to a year.
All the way up to a year. And guess what? The
Builder
longer you lock that rate in, the higher the rate is, because the investor is sticking their neck out before you close on that transaction. But Justin, can you take us on a deep dive, kind of how interest rates are derived, and the fact that rates change every day, just like the stock market does? Right? So you don't call your stockbroker in the morning or your financial advisor and say, hey, what is Apple stock today? And then tomorrow expect it to see, or even 5 minutes later to see it's the same price.
Right. So we'll get into your personal info and all the things that go in there to making your interest rate, but also the stock market every day dictates the interest rate. So loosely, mortgage rates follow the 10-year treasury. So the 10-year treasury is going up, rates are going up. If the treasury is going down, rates are going down. So in general, every day, like, the market is moving and your mortgage interest rate is changing. So if you're not locking right now, it might be different tomorrow.
Yeah, and there's so much, guys, that goes on behind the scenes that drives interest rates. We're talking about the market itself, the stock market. We're talking about employment, consumer confidence, recession, inflation. Oh my gosh. And we've seen a lot of that lately with tariffs and everything else that's going on. There's so much economic data lately that's going on that it is tough to keep up with.
And the Fed's kind of playing it close to the vest. They're scared that inflation could reignite, so they're not just cutting interest rates. And we don't know when their next rate cut's going to be. They actually just met this week and they left everything the same. They didn't go up or down. And they didn't really provide a whole lot of guidance for the rest of the year because they want to wait it out and see what tariffs are going to do and how the change in the administration is going to affect the market.
Yeah, and that's just it, guys. We know in time rates are going to come down. We've been saying that for 3 years.
Right.
It will happen at some point. We just don't know when, and we don't know by how much, but it will happen. And we feel like everything that's going on right now is temporary, that we'll come out on the good side of things once all this is over.
Correct. And to us, we think now's a great time to buy because there's not as many buyers in the market and there's more inventory. So if you're looking to get a good deal, now you actually have some negotiating power. You can beat the seller up a little bit. You can ask for some closing costs. You maybe ask for a reduction in price. As those interest rates come down later in the year and next year, there's going to be a lot more buyers that enter the market. And when demand goes up, prices go up. So now is your time to optimize on the market.
Exactly. And guys, one thing we want to tell you too, when you call about an interest rate, there are several ways to go about this. Okay, the old tried and true way is what we consider as par or no points. And what that simply means is that you're not paying anything extra for that particular rate. But you do have the option, Justin, of buying points and potentially buying that rate down. So 1 point equals 1% of your loan amount. A half a point equals 0.5% of your loan amount, a quarter, 3/8, so on and so forth. So you may call some lenders today and one quotes you 6.5 and you call another one, they're at 6.25. You think, oh my goodness, that lender is a lot lower. Well, maybe they're charging points. Everybody can do the same thing. Justin, every lender out there in America, banks, mortgage companies everywhere, get their money from the same place, right? It's investors, it's Fannie Mae, it's Freddie Mac, wherever that may be. We all get our money from the same place. So one person or entity is not going to be a tremendous amount lower or higher than the next person.
Right, there shouldn't be that much variance. And if you're not locking your rate today and you haven't found a house, maybe not everybody's perfectly honest, right? Like if you're calling somebody and we say 6.5 and you call down the road and say, hey, I just got quoted 6.5, like, oh, we're 6.25. I mean, are they really 6.25, or do they know you're not locking your rate today? So you got to realize what you're asking and how you're asking it to know if it's actually an accurate quote.
Yeah, and good point too, Justin. 9 times out of 10, 99 times out of 100, you're not going to lock your rate, or you can't lock your rate in until you're under contract on the property, because we've got to know the terms and the closing date to know, what we need to lock you in for and for how long.
We're truly setting that money aside when we lock it. So you can't just lock the money indefinitely, right? We need a close date to know how long we're locking that money for, because you're not collecting interest on that until you close and start making payments.
Yeah, exactly. So just keep that in mind when you're out there shopping around. Make sure you're always comparing apples and apples, because Justin, I can't tell you how many times in my career when somebody has said, hey, I found a better deal, and I say, hey, wait a minute, send me over the estimate, let me take a look at it, because we'll be the first to tell you. If it's a better deal, we'll tell you. But again, most of the time we get that, oh my goodness, there's points on there. And again, we can do the same thing. If you want to charge points now, it only makes sense some of the time, guys. What we do is we look at it and we say, what does it cost you? What does it save you? And how long does it take you to recuperate the cost of doing? It's got to make sense to 5 points. Sometimes it makes sense, sometimes it doesn't.
Or maybe you have a seller credit and we can use the seller's money to buy down the rate. So it makes sense in that scenario, but it doesn't always make sense to just pay 3 points up front to get a prettier interest rate and then refinance in 3 years and never break even on that upfront cost that you paid at closing.
Yeah, Justin, I've seen sometimes where it may take 9 or 10 years even to recuperate the cost of buying points.
Correct.
Right? In most cases, if you're paying a point, it may take you 4 to 5 years. And as Justin mentioned, if you're going to refinance in 2 years, and we don't know, maybe if rates are lower, you're going to refinance, you've gotten no benefit out of that. You've actually lost money by paying those points up front.
Right, and there's a lot of people who like to change the loan type on you too. So we might be quoting a conventional rate, and you call down the road and they throw you an FHA rate. An FHA rate is a lot lower and it looks good, but you're charging a 1.75% funding fee and monthly mortgage insurance. So maybe that's not the best deal for you, and that APR is higher, so the cost of borrowing money is actually higher over time.
Well said. And we usually will lean towards FHA, guys. If your credit score gets a little lower, right? If you're 680 and below, 9 times out of 10, it's going to be better to go FHA. Take the lower rate, right? And that funding fee he mentioned is going to be financed into the transaction. So it's not an out-of-pocket cost, but sometimes it makes sense to do that.
It does, and sometimes it's more forgiving with the mortgage insurance. So every scenario is different, and that's why you want to call your lender and give all the specifics for us to walk you through it.
Exactly. And also, guys, keep in mind, all mortgage interest rates are risk-based from the investor. So we've talked about, let's say maybe you're self-employed and you don't qualify on a full documented loan. We get your tax returns, you don't qualify, and you need to go bank statement. Well, that's a portfolio loan, right? So it's going to carry more risk for the investor, therefore it's going to carry a higher interest rate.
Right, but it's the only way to get you closed, so that's a way to still solve your problem and get you in the home that you want to buy, but it is risk-based. Same thing with conventional loans. If you're buying a second home or an investment property, that rate's going to be higher than if you were buying a primary residence.
Yeah, and Justin, the reason for that, guys, is if times get hard and you can no longer make your payments, more than likely you're going to let an investment property or a second home go before your primary residence, one that you're actually full-time living in. You need a place to live, so you're going to continue to do whatever it takes to make that payment, and that may not be the case for a second home or investment. So therefore, investors are going to price it accordingly.
Right. I mean, also, other than that, I mean, also, if you're going to a builder or you're looking to do a long-term lock, that's still risk-based. If you're going to set that money aside for that long, it's going to be a higher rate. So a lot of times we try to only lock for 30 days, and that's going to get you a better rate than locking for a year. And also, I mean, a shorter term, if you're doing a 15-year term possibly or a 20-year term, that's going to give you a little bit better rate, because the bank's not going to be at risk for lending that money for as long as a period of time. In theory, I mean, a lot less can go wrong in 15 years as opposed to 30 years. 30 years is a long time to have to pay back your loan.
Yeah, there's even a 40-year option out there as well. But one good thing that we do here at Rate that we offer every one of our customers, once you lock a rate with us, we offer a one-time float down. If that rate drops a 1/4 point or more prior to closing, you can float down one time to that market rate. Not every lender offers that, Justin.
No, if you're smart enough to work with Heath and I, we're going to cover that for you and cover that cost, so it's a free float down.
Yes, and I mean, what a better way. You're protected if it goes up, or protected if it goes down. So it takes a lot of that risk off the table.
And to me, there's a lot more upside risk, so I would play it safe and lock your rate knowing that you've got that free float down in your back pocket.
And Justin, everybody asks us every day, right? Should I lock or should I not? And there's no way in the world we can make that decision for you guys. You're protected if the rate goes up or down. So there's no reason not to give us a call and do business with us.
And in this volatile of a market, I still suggest locking because you just don't know what's going to happen. Even the experts have no idea how it's going to swing from day to day or what economic, speaker is going to come out and say something that spooks the market. So you really have more to gain by locking and using that free float down than riding the market and hoping for something to go in your favor.
Right. Well, I, for one, would rather lock a rate in and it go down slightly versus not locking and it goes up a lot.
Because we've seen that happen this year.
Oh my gosh, every day we've seen that. In fact, Justin, I locked 2 loans last night, and this morning, right out of the gate, rates went up.
Right.
And we had another price increase in the afternoon.
Yeah, so it's going the other way today, and it's multiple times per day. So
Yeah.
a lot of times there's no rhyme or reason. You would think us striking a trade deal with the UK that it might help the market, but it's not. It's going the other way today.
Well, as we've said many times, guys, it's not really the data that's driving things right now. It's more about what's being said by certain individuals. So that's very frustrating. When we feel like we've got a pulse on the market, and something completely goes the opposite direction.
It's an emotional market, just like it's an emotional process buying a house. So
Right.
play it safe, lock your rate. Don't let the rate scare you from not buying today. I mean, it's a great time to just buy a house. You can buy the house and date the rate, and you're going to be able to refi sometime in the next 3 or 4 years. So if you can get a deal, it's still worth buying today. Don't be scared.
Yeah, listen, we know there's a lot of questions and concerns about interest rates. That is the hottest topic in our industry. So again, we encourage you to call. We'll walk you through every bit of this, quote your current rates, all that good stuff. You can reach me at 615-347-0578.
And you can reach me at 865-406-8486. We're both happy to help.
All right, guys, thanks again. Tune in next week for another hot topic. And we know the scenery's changed a little bit today, but it's good to be back and be back to work.
All right, looking forward to it. See y'all next week.
See you next week.